I'm Alexis Nolan from Mining Journal Select, and I'm delighted to welcome here on the second afternoon of Mining Journal Select London, Joe Battershill, the Chief Executive of Anglesey Mining. Joe, great
Thank
to
you,
have you
Alexis.
with us.
Great to be here. Great to be here.
Good. Now, Anglesey Mining, it's had a long journey, and
You could say that.
and I know that your part in that journey is shorter.
Yeah.
But also your part in that journey has seen some real acceleration with the company, and so obviously I know we've got an update coming up on Parys Mountain, sort of the sort of core legacy project in a way, I guess. But there are a couple of other aspects as well. So there's Grängesberg in Sweden, iron ore, which is a fantastic opportunity.
Indeed.
You've been growing your stake in the company up to just shy of 50%.
That's great.
With first dibs on the remainder, and a PFS on the project. I think a PFS.
Yeah, we
completed
that in July last year. Yes.
Yeah. And then there's Labrador in Canada as well too. On a smaller extent, but I guess we'll focus a little bit of an update first on Parys Mountain, and before we move on to Grängesberg.
Sure. I mean, Parys Mountain. I mean, you're absolutely right. I mean, the objective, or my objective, since I joined the company 18 months ago, and we really started work on Parys in November 21. So it's really sort of 15, 16 months of work. It's all about taking what's a lot of historic information. I mean, we've got data going back to 1962. And more modern data from sort of 1991, 92. And so we wanted to get some more data because it's about bringing all of that old data up to a level that we're comfortable putting into a feasibility study. I think, the mindset of my predecessor, and admittedly the company was in sort of stasis for 5 years. So, if you go back a decade, my predecessor's view was about trying to do a bootstrap sort of startup. Let's start small, let's generate some cash to then do the work we need to do to get this thing going. And I just don't think you can do that in today's environment. So we've got to take all this information and we've got to bring it all up to a level that's acceptable and you can put into a set of feasibility studies, whether it's pre-fees and then fees, and also take to financiers. So over the course of the last 12 months, we've done on limited resources, because of the state of the market. We've been very judicious in our spending. We've done the drilling, which is now we're doing the resource update now, which is now done, and we're just waiting for the board to finalise the numbers. We've done geotech, which is the first proper geotech's been done on the project for 30 years. We're a long way down the environmental baseline study and the permitting side of things. I've got a meeting with the Mineral Planning Authority and I think 32 statutory consultees next week on site, so that's going to be looking forward to that because it's a genuine sign of progress. It's a genuine sign that we're getting more comfortable that all these elements of work and data are now getting to a level that we're relaxed. Well, not I'm saying relaxed about it. You're never relaxed about anything, but we're comfortable going into it. Our level of confidence has increased. Yeah, that's correct. Yeah. And look, I mean, and on top of that, we have I think we have possibly one of the best exploration projects in the UK. I mean, possibly, you would compare it to some other parts of Europe as well. But our Northern Copper Zone, which we talked about, and we did an update it into the market in late last year. I mean, that's a very large, or potentially a very large project with, yes, it's lower grade, but there are higher grade components to it. And the 9.4 million tons of resource we currently have. I mean, that compares to a resource, an internal resource that was put out in 1970 of 33 million tons. And I don't think the people in 1970 were stupid, put it that way. So, I think there's significant upside, and as I keep saying, there's a lot of unfinished business up there. Yeah, for sure.
Yeah, and you've got the bit between your teeth, and you say you're going.
I'm passionate about it because I look at mine has been very good to me and my family, right? And I look at situations like Amlwch, the local town. Unemployment's not excessively high, but the hourly rate. I mean, we've done studies of the social side, and hourly rates up there are very low. It's a lot of seasonal work, and for the last 35 years, everybody that drives out of Amlwch, the first thing they see on the hill is a head frame on the mine. And we get asked a lot of questions. Well, when are we going to have when are there going to be jobs here? And I think there's a real opportunity to sort of give something back to the industry, and do something for this community. And that might sound cliche and everything, but I'm very passionate about that because I mean the locals are super supportive. They're very welcoming, and they there's a requirement for well-paying jobs up there.
Absolutely. So that's on one side.
Yes.
That's one part of the bigger picture for you, an important part of it. So, but with Grängesberg, that's a different story in its own right. But
Look, I
again,
mean,
moving quickly.
yeah, totally. Look, I mean, I think we'll probably move in less quickly because one of my mandates when I got brought in as CEO was to sort of look at the consolidation of that asset. So I mean, as you say, we're up to 49.75. The 50.25 outstanding it's in a right of first refusal that really is ours to call. So we can do that, when we can. But I look at the asset and I just think, and to sort of look at it from a more macro sort of perspective, the European, I mean, I always think of the number 65 because in the European steel market uses about 65 million tons of iron ore, and about 65% of that iron ore gets fed into electric arc furnaces, which means they need iron ore that's plus 65 or 67%. Now, prior to the Russian invasion of Ukraine, 20 million tons of that came from Russia, 20 million ton came from Ukraine, and the rest came from Sweden and Brazil and Australia, wherever. And I don't think that Russian stuff's going to be back for a generation.
No.
So, we've got a project that can do, up to 2.5 million tons a year of 70% Fe concentrate, which is, there's probably half a dozen places in the world that can do that, maybe more, maybe a dozen or so. But it's really
high quality,
premium product. Now we've got to get it permitted. We've got the pre-feasibility studies done. I mean, they're very, very robust numbers, but it's an old operation, restarting an old operation. So there are legacy issues you need to deal with. But interestingly, I mean, as part of my strategy as CEO is you've got to try and provide optionality to investors as well. And so one of the things we've done recently was an MOU with a company called Mine Storage International. And we're looking at sort of end of mine life. What do you do with the mine after 20 years of mining? Well, we'll have 4 shafts, and Mine Storage International, they're looking at putting pumped hydro storage schemes into these shafts. You put a turbine at the bottom of the shaft. We have tailings dams on the surface that can be reservoirs, and you pump the water down and in peak hour or peak pricing, and then when it's off peak, you pump it back up. And so 4 shafts, you can do quite a lot of electricity. Now, it's only after I've really looked at after we did that deal, I kind of went, well, actually, we're in an industry with a lot of uncertainty, and permitting is probably the most uncertain thing about a mine.
Yeah.
Well, if we don't get it permitted, we'll turn it into a pumped hydro scheme.
Optionality, as you say.
Optionality. And I think for a £6 million market cap, we've got optionality in spades. And I mean, Labrador is, the liquidity value of that, if we were to sell that those shares on market is, 1.6 million pounds or whatever. There's a bit going on in the background with Labrador. I mean, it's a great project. It's a cracking project, and the management team are doing their best efforts to get that on it. And if they make the progress I think they make there, I think they can. That could be worth multiples of where we're at now. So look, but markets are difficult though, right? Markets are difficult.
Markets are very difficult at the moment, and in terms of that sort of investor narrative, maybe yes, there's optionality, but and that has its upsides. I guess there are some challenges around that in terms of uncertainty and different ways that things could evolve. I'm not asking you to focus on the negative side of that challenge, because there are upsides. But how do you see that investor narrative, and what sort of work do you need to do on that?
Well, look, I mean, I think the investor narrative is, look, it's really hard. I mean, after working for Western Mining for a decade, I went into the broking and investment banking industry and did that for just over 15 years, and I've never seen it harder to raise money for small speculative, for the micro cap end of town. And you look at commodity prices, and normally when it's this difficult, commodity prices are terrible. Well, we're looking at plus $4 copper, almost $2,000 an ounce gold, but they might as well be $2 a pound copper and $1,000 an ounce, because that's how hard it feels. So you've got to get more creative, and I'm not saying this is what we're going to do, but in terms of when you look at spaces like the royalty companies and stuff like that, this is where they shine. Because and if any royalty companies are listening, don't be offended, but they are funders of last resort. right? I mean, you go to them when you can't raise equity,
Yeah.
and so this is where they can clean up in these sorts of environments. And that's where they will do so well. So but they provide a very important service. And I'm just saying that's one example. The other option is you've got to start talking to those deep pools of long-term capital, family offices, certain private equity groups. The last thing I want is my shares to be held by an institutional group who are mark to market every 3 weeks or every 3 months or whatever.
Yeah.
I mean, because the chances are they'll have to sell you quicker than they bought you.
You want some stability.
So you want some stability, and we offer a very good discount to fundamental valuations.
Yeah.
And yes, there's risk involved, obviously, but that's where the reward is. Right? I mean, the risk reward curve is shaped like it's shaped for a reason. Right?
Sure.
So it's a challenge, but we'll
It's
get
a
there.
good challenge.
We'll get there.
Yeah. And I'm sure with all the optionality, the right options will come through. So
I do
thank you
hope
very
so.
much, Joe.
Thank you. No worries.
Cheers.
Pleasure.
Take
Cheers.
care.